Good morning, everyone, and welcome to a July-August update of Global AgriTrends on the beef and sheep meat insights for New Zealand. So thanks for having me. My name's Simon Quilty, and today we're going over, some of the immediate trends and some forecasts. So let's start with, once again, record global beef prices in the month of June. Got to 139.4. Back in April, we thought that was a record, but this time it's gone higher, and I believe will continue to go higher as we move forward. So you might say this is the start of the journey. And back in 2022, March, we thought it was a record level. That was COVID. It was unsustainable. Whereas today's record prices in beef are truly sustainable. And I think we see the peak sometime next year. When it comes to sheep meat production, we're almost at record highs. We're at 148 on the FAO measurement, the ovine index, and 152 was the previous high in 2021. Once again, I think the next quarter will show record highs in sheep meat as well. And once again, I think we peak sometime next year. And so let's touch on when that will be, because these truly are the benefits to be passed back to the New Zealand farmer. So since October, November 23, the low were 68% higher and going higher again. So here are my thoughts that what we find is that when we peak in sheep meat prices globally, and this is measured back to 2012, but beef tends to peak around about 2 to 3 months later. So I'm of the opinion that we're going to see peaking in sheep meat probably closer to around about the middle of next year, June, July, and beef to follow probably in August, September or October next year. So to be higher than the previous peaks, as you can see for this graph, and so we'll get into those actual numbers as we move into the presentation. So the good news is that we have got a lot more upside due to strong global demand and tightening supplies. So what round are we at? It's the global Donald Trump versus the world when it comes to tariffs. We're a little unsure if we're in round 1, round 2, or round 3, but nonetheless, there have been many developments in recent times. So for what it's worth, when we look at beef and tariffs, New Zealand, the USA has 10%. You have nothing into China in terms of tariffs. Japan, you sit at 21.6% alongside Australia. Korea at 10% and 0 elsewhere in terms of beef. And sheep meat, America is the only place in the world where you have a tariff, and that's at 10%. So for what it's worth, the question is how long all that remains in place as we speak. So let's just talk about some of the influences of his tariffs on others around the world that will flow to you, I believe, some of the benefits. So let's stop with the whole process of beef exports into China. And now we've seen for 3 months that America, due to no licenses being renewed by China, does not have access into China as we speak. And as a result, that has seen renewed demand into the Chinese market for Australian and New Zealand beef over the last 3 months. So the reasoning there is that there is a review of all imports going into China, a safeguard review of which New Zealand is part of that review. You've recently had a delegation from China visit you on that. And the results of that probably won't be known until at least August, but I'm betting early next year. As long as that review is in place, I don't think the US licenses get reinstated, and therefore demand for Australian New Zealand beef remains very high into China. Okay, so when we look now at Trump's proposal of 50% of tariffs on Brazil, and this came about only a week or so ago. This is separate from the tariffs on steel and aluminium, but effectively this is all about the former President Bolsonaro, and Trump describes his current prosecution as a witch hunt. Truly outside of really any trade policies, but as a result, Brazil is pushing back. And if these tariffs remain in place, I think the impact in the North American market is dramatic for both New Zealand and Australia. So when we look at recently what the high tariffs that Brazil is up against, so they have in total today 36.4% duty that was introduced back in April. The net effect is we've seen a 62% fall over the last 3 months in Brazil exports into America. And that's because these duties have become somewhat unpalatable. Up until then, I mean, January to May, Brazil exports were enormous, up 118% year on year compared to New Zealand's, with 79,000 tonnes versus 175 for Brazil, and Australia was at 157,000 tonnes. Now with 50%, that raises the overall tariff for Brazil to 76.4%. And I think the net effect is that you're going to see, this is our interpretation of what US pricing looks like out of Brazil versus China. And there's a $4,300 per metric tonne difference because of the enormous size of that duty. And effectively, all beef, I think, stops flowing into America and is rediverted potentially into China and maybe some other places. But the clear message here is that you in New Zealand will be a clear beneficiary of the lack of beef out of Brazil. They only really have the option now of going to Australia and New Zealand to fill the void in America for lean beef. And so you see this price spread here of 61 US cents a pound for US fresh 90s versus Australian and New Zealand in the orange there. Today sitting at around 309. And then you've got below there 350 on Australian, New Zealand 90s. And then you've got Brazil. I'm of the opinion that we will see almost overnight, if that enormous tariff comes in, demand for Australia and New Zealand jump dramatically, up around 16%, I believe, cow prices to rise. So that's not just for boneless beef, but I think that gets passed back to the farmer in both New Zealand and Australia. So what will this lead Brazil to fill other markets, thereby impacting New Zealand elsewhere through displacement? I think it's minimal because, one, Brazil does not have access to Japan and Korea, your number 3 and number 4 market. And as we've said, your number 1 market is the US. So 1, 3, and 4 are in good shape. China will see more Brazilian beef, but it can handle it. It's an enormous market. And we know that there's no US beef going to China, so there is a void there to be filled. So the last point being is that Brazil is on the brink of rebuilding and tightening their own supplies in 2026. So overall, I think the impact is minimal, and more importantly, New Zealand farmers and processors get the benefits of higher prices in North America that gets passed back to you, the value of your cow meat. So here are my forecasts for cows in Australia on the hoof. And we sit today just above $3 there. But I expect by September, October to go to $3.65. And as the tightness continues, we go into next year at $4.40. Pretty dramatic. Now, if I was to convert that into a New Zealand equivalent, New Zealand cows today, I think, are sitting around $6.40. That would put New Zealand cows by, I think, probably closer to October, around $7.30. And next year, New Zealand cows to go to a whopping $8.50. So many other variables, many things could change, but as the fundamentals sit today, that's where the pricing, I believe, is heading as we go forward. So New Zealand and Australia continue to backfill for America as the US rebuild of their herd gets underway. So for clarity's sake here, we know that US global beef shipments have been declining really for the last 5 years as they've been in liquidation and as their drought has got worse and worse. And effectively, if we just look at January to May of this year compared to previous Januaries to May, you could see that where they're down 26% over 5 years. So Australia and New Zealand are filling the void all through those global markets that US beef is no longer supplying to. And the same holds for frozen as well. Frozen US exports have declined, and particularly during the 22-23 period, but those lows continue. And overall, if we look at what the exports have been on a year-on-year basis, they're at 21% down over the last 4 years or so. So Australia and New Zealand play a crucial role in beef of backfilling. And you can see that as on the right there, US in blue has fallen in supply. Australia and New Zealand have picked it up in Japan, up 13% down versus a 22% fall out of the US. In Korea, up 17% versus a 22% fall out of America. In China, we've picked up 17% versus a 24% out of America decline. And in other markets, up a whopping 40% out of Australia, New Zealand, and America's declined 27%. That is backfilling. And we have both countries been doing it for the last 4 years or so. So let's talk about where America's at in its rebuild. And if we overlap the current cow kill against what happened in the last serious rebuild of 14-15, you can see the trend is almost identical. And I think we're coming to the low point in the female kill, and next year will be the low point in the fed cattle kill in America. So both look incredibly exciting. July, potentially the low point, and I think that results in much higher prices over the next 2 to 3 months. And for what it's worth, when we look at the fed cattle price in America versus today's price in 2014-15, you can just see the similarity. And it all points to fed cattle prices, I think, going another 20% higher to June, July next year when it peaks. And I think the box beef will probably follow a month or two later in terms of its peaking. So some good upside to be had in the North American market. And if we look at where export values have gone globally in all other markets in beef, and I think New Zealand follows a similar trend to Australia, it's up 17% export values globally for the month of May this year versus May last year to all key global markets. The only exception is Korea. And when we saw China shut out America, they diverted their product into Korea, the Americans, which actually lowered the price. Pretty well, though, all other markets were better. So for Australia and New Zealand, it's a good sign of strong global demand, just not North America, but everywhere else. And let's look at sheep meat and the role that both Australia and New Zealand play in global markets. So production in New Zealand for 24 was about 428,000. In Australia, about 928,000. So we're just slightly double what you are in Australia. But on sheep meat exports, it's about a 65% difference, not quite double. But you can see that if you put Australia and New Zealand together, it's about 80% of global shipments of sheep meat. And you can see that what happens in Australia really drives, I think, what happens in New Zealand. So it's so important to look at the Australian trends to help decide and look at where New Zealand heads in pricing and demand. So here we are with record prices in Australia for lamb, both trade lamb and heavy lamb, that we've seen in the last week, above $11 Australian. I think that all these are passing the same benefits back to you guys. And we look at Australian lamb slaughter. I mean, we have been in liquidation for now 2 years, and pricing slaughters year on year is down 15% on lamb for that week, and for mutton down a whopping 36% for that week as well. And expect tight slaughterings out of Australia, at least for this year, next year, and the year after, 25, 26, and 27, as we move into a rebuild. Because you can see here that we've been liquidating now. I think it's 9 quarters in a row that we've liquidated. And with such heavy liquidation, you've got to pay the piper. And to me, this is where New Zealand gets all the benefits of tight supply out of Australia as we go into a heavy rebuild. And the benefits we're seeing globally, but in particular North America, lamb legs have jumped 40% this time last year compared to today. Lamb shanks are up 37%. Lamb shoulders, square cut, up 23% in America compared to a year ago. And French racks up 18%. And the real winner comes lamb mince. Volume is up 20% or 21%, and price is up 20% as well. So the message is really clear that global prices are firm and going to continue to be firm. When we look at the current situation in New Zealand on production, steers are down a whopping 12.5%. Heifers are up 10.7% in terms of production, and cows up 10.7%, and bulls down 5.4%. I think, once again, our problem here is that liquidation continues in the New Zealand herd. And we've talked about the dry conditions in the past, the poor margins, and farmers exiting the business as competition for land use happens. But when you've got heifers and cows at these kind of rates of kill, well above the expected, I think you've got to say with confidence that liquidation has continued in the New Zealand herd, which all points to tighter supplies going forward. And yet, as you know, we've got overall strong prices in New Zealand. So it's just going to get tighter, and I think prices continue to be elevated for at least this year, next year, and probably well into 2027. When it comes to mutton and lamb, we're looking at declines of 9.6% so far on lamb in terms of the overall kill, and in mutton up 7.7%. Both, to me, highlight, once again, ongoing liquidation because of some of the conditions have continued, and farmers are just simply exiting the market. So once again, this all points to tighter supplies for the balance of this season, but I think as we go well into next season, the ramifications for both cattle and sheep will be felt going forward. Tighter supplies and strong global demand points to very good livestock prices. So our forecast, we've looked in the past at the relationship between New Zealand lamb and Australian lamb prices. It's got about an 80% correlation. So to me, I think that we've still got a little bit more upside here in New Zealand lamb for the year. Current price is about $9.80. I think we go to $10, maybe $10.50, and there'll be regions that may be there already today. But it's next year that really interests me as tightening continues, going to $10.50. Now, if by chance you should be at $11 in August, I think you can say with confidence that then the following July, August, or June next year, you can add 50 cents to $1 to wherever you land this year in August, because next year will be higher. So when it comes to cattle and prime steer in particular, it's an even higher correlation between Australia and New Zealand. And my forecast here is putting, I think, prices at around $7.98, let's call it $8 for New Zealand prime for the rest of this year. But I'm truly of the opinion that it's then a seasonal soft landing as we go forward, And next year prices, I think you can add another 15% on top of pretty well all categories when it comes to higher prices for next year. So in all instances, I'm very optimistic. So in conclusion, a 50% tariff on Brazil will strengthen imported 90CL prices and cow prices in New Zealand. New Zealand beef items for the US I see as essential, and therefore tariffs are likely to be passed forward, not back. Australian supply of beef and sheep meat will tighten significantly in 2025, and New Zealand's going to be the beneficiary with such strong correlations. Strong demand is good globally, and Australia and New Zealand's role in backfilling increases. We are filling the void of America. Key supply cycles are in sync. Brazil, Australia, and the US, all moving into rebuild next year, therefore tighter supplies. New Zealand, the forecast, I've got lamb at $10 peaking this August, $10.50 next year. But if you could add $1 to that, it wouldn't surprise me. And you've seen our beef prices also looking very strong. So with or without tariffs, the fundamentals are strong. Tight supply, strong demand. And to me, I think the future looks outstanding for New Zealand farmers. And I think the processors will also be able to make a dollar along the way here as well. So with that said, thank you for today. There's my disclaimer. If you've got any feedback or questions, we'd love to hear from you. Thanks again.